one of my favorite patterns that I tend to look at in the trend direction. It's called the inside bar failure pattern. I was actually going to make an analysis video on the Aussie Kiwi currency pair on Friday after this inside bar was formed the day before, on Thursday, 2nd of March. But due to lack of time, I couldn't finish posting that video, so I just left it. But today, on Tuesday, 7th of March, I decided to finish off that video and turn it into an educational video rather than analysis, to highlight one of my favorite trading strategies. So the inside bar failure is when price goes above the high of the inside bar or below the low of the inside bar low, and then turns around and goes in the complete opposite direction. So in this case, the trend had been bearish, right, in the prior days after the Aussie Kiwi currency pair broke that trend line. Rates had been going down, and then after a sharp sell-off, we saw price consolidate inside this inside bar range. Yeah, an inside bar is where the range of the day is contained within the previous day's range. We all know what an inside bar is, right? So typically people look to trade the break above or below the inside bar's range, whichever direction it breaks. So people tend to go long if the high breaks or short if the low breaks. In this case, there was some follow through on the upside, so that strategy may well have worked. But given that the trend had been bearish, I was actually looking to trade the failure of the inside bar, which is what I normally do using these candle shapes. So the idea is really simple, as I have explained in the analysis video, which you're gonna hear shortly. In fact, let me just go straight to that. I'm gonna pause recording of this so you can see what my thinking was behind that setup, and look at how precisely a price has turned from the area I had highlighted in that previous video. Hi traders, I'm looking at the Aussie Kiwi currency pair, and there's a potential bearish setup in the making. So the trend has been bearish and we want to be going with the trend, right? After rates broke below this trend line, it's been a one-way move in the currency pair. It has bounced back though in the last couple of days. So zooming into the chart a little bit, you can see that price created an inside bar candle on Thursday, 2nd of March, and at the time of recording, the currency pair has clearly broken above the inside bar high to take out liquidity that would have been resting above it. Liquidity from people who had already been short this currency pair. Their stops would have been placed above that high of that candle, and those orders have been tripped. Meanwhile, people who were looking to go long on the breakout, those orders were taken and the market has moved higher. Remember, the market is always a function of liquidity. It moves from one area of liquidity to the next area of liquidity, right? So with that in mind, where is the next pool of liquidity? Well, I would say below the inside bar low, right? Because people who bought this, they would have probably placed a stop loss below the low of that candle. So that's the next pool of liquidity that rates may go down to if we see a bearish reversal on the lower time frames in the next few hours, or perhaps in early next week. So keep those levels intact on the chart, and as we look for areas of potential resistance to get short at. Okay, so this 108.73 level is one of those levels. Let me just make another copy of that and put a line on this candle. This level, you can see right here, is a previous resistance that broke on this particular day, on the 25th of Jan, with a massive move higher. Once that level broke, rates never came back down to retest this level, and on Wednesday, 1st of March, it sliced through that, right? Now it's retesting that level as possible resistance. So I would be looking for price to potentially turn lower from around this area. Okay, so once we see a bearish setup in that area, then I would be looking to go short, and I would probably target the pool of liquidity resting below the inside bar range. So you can zoom into your smaller time frames, maybe the hourly chart. So for confirmation, we will need to see some sort of a bearish looking hourly candle, like a inverted hammer or something, to give us a bearish signal and to get the shorts excited once again. So I'll be looking for a bearish reversal at that area. Okay, but the whole idea of this the setup is basically the market moving from one area of liquidity to the next. Yeah, so coming back to today's recording, and you can see price did go a little bit deeper than I had expected, but eventually went to take out liquidity pool resting below that inside bar low. If you like this video and how I analyze the markets to look for trade ideas, then make sure to join my private group, details of which can be found on my website at tradingcandles.com.